Hello and welcome. You've tuned into In Your Interest here on News9 Live. I'm Krishna Kumar, and the big story we're beginning the show with is India's GDP growth for the first quarter of this financial year, which is coming at 6.7%. It is indeed at a 15-month low. India's GDP grew at its slowest pace in 15 months at 6.7% for the first quarter of this year. The primary sector, which includes agriculture and mining, took a hit, dipping to 2.7% compared to 4.2% last year. This data covering the April to June quarter comes just after Prime Minister Narendra Modi secured his third term in office in the month of May this year, making it a critical indicator of the economy's current state. Experts had already anticipated moderate growth this quarter, citing factors like the general elections which came in, and of course the summer heat, which also took a hit on many sectors across the board, and of course the slowly reviving rural economy as well. We have Teresa John, Deputy Head of Research, a lead economist at Nirmal Bang, joining us to help us put those GDP numbers into perspective. We also have Mithali Nikore, founder and chief economist of Nikore Associates, also joining us. Mithali, thank you so much for being with us. Let me begin with Teresa John. Teresa, 6.7%, the estimates were anywhere between 6.5%, 6.5% to 7%. So in that sense, it is in line with what the economists' estimates were.
Right. Broadly, it is in line with market consensus, so probably a tad lower than the consensus numbers. It is better than our expectation. So as you said, we are seeing some cyclical moderation in growth over the last few months. It's not that we are in a sharp slowdown, but definitely because of the heat waves, elections, and in general urban demand, we are seeing some fatigue even in indicators like car sales, etc. After the the pre-pandemic, post-pandemic boom that we have seen.
Right, Teresa, stay with us. Let me take this across to Mithali. Mithali, I want your initial thoughts on that GDP number. Bear in mind, for the same quarter in the last financial year, the GDP growth rate was at 8.2%. And even for the previous quarter before this, it was at 7.8%. So all said and done, this number is in line with what was generally expected.
So, Krishna, definitely it is in line with expectations, but the headline number is in line with expectations, but the composition is a little bit concerning because when we look at two specific sectors that have slowed down, the first one being agriculture, so mining has actually done very well, but it's the agriculture sector where the growth has slowed down to 2%. And, this sector is not as linked to elections as the services sector is. So, it is concerning that the agriculture sector growth slowed down. And one of the major reasons, in my view, is actually climate change, floods, droughts, etc. And, the impact of these weather-related and climate change-related events, which is now being seen in the agriculture growth slowdown. And the second, which I want to just say off the bat, is the services sector slowdown. We're seeing the services sector slowdown come across, the subsectors in trade, as well as in, financial services. And of course, government spending also slowing down. So I think this is also concerning because, at the end of the day, again, financial sector has less to do with, with the elections. So it is definitely concerning for these two sectors.
Right. Teresa, the question we have to ask at this stage is that for the full year, there is supposed to be, the expectations are that the second half of this financial year will be better than the first half. So in that sense, a recovery can be expected from here on.
Yeah, so that is possible. So as you said, the current quarter was impacted by the heat wave, elections. So private capex has actually seen a slowdown. And even government capex has actually seen a slowdown. So we could see some pickup in both government capex and private capex potentially in the second half of this year. So I don't think people will revise down their full year GDP growth estimates, but at least for the RBI's estimate, which is at 7.2%, probably substantially higher than what the consensus is at, there could be some downward risk.
Mithali, according to some estimates, government capital expenditure needs to go up by nearly 40% for India to achieve its full year GDP growth targets. So in that sense, there's a lot of catching up to in that department.
No, absolutely, Krishna. I mean, if you look at, there are two categories, subcategories that I was looking at, in the year-on-year growth breakdowns. And two of those, the heat waves point that Teresa made is so good, because if you look at the, reduction in the number of passengers that are being handled at airports and at railways, those have actually reduced. In 2023, there was a growth of 20% in, the passenger movement. Now that growth is down to 7%. So, at the end of the day, the impact of the heat waves really being felt there. And then even the cement industry, it's almost been flat in Q1 of 24-25. The cement industry growth has come in only at 0.3%. So these two numbers and sectors definitely concerning. And again, this is where the government really needs to look at the specific sectors which need support, because it's not only about wide government spending and social protection, but also about supporting the industries that really need that help.
Right. Teresa, there's also talk of, the urban consumer confidence, which seems to be dipping and having an impact on the main GDP figure finally.
That's right. So as I was highlighting even earlier, we are seeing some, moderation of that pent-up demand that we saw after the pandemic. This is not a India-specific phenomenon. We are seeing that even in the US as well. So some of the pandemic era excess savings have largely been exhausted. So it's not that urban growth is falling off a cliff, but definitely we are seeing slowdown. I think the rural growth will have to pick up, and then the hope is that that will happen in the second half of the year, because the monsoons have largely been normal. Actually, we've seen excess rainfall, but there is still some concern on when we look at the spatial distribution of the monsoons. So when we look at northern India, particularly states of Bihar, Punjab, the agricultural belt, even UP. The rainfall has actually seen a significant shortfall in those core rural belt.
Mitali, if I were to ask you, what are your estimates at this stage for the full year GDP growth?
So, Krishna, I'm not revising my estimates for the full year GDP growth. I'm still going to be bullish and say, we have to expect somewhere between a 6.5 to 7%, and in fact, it could even exceed 7%. But this depends a little bit on government spending. And while I'm not going to say, going up to 40%, but I think some of the areas in which the government really needs to start investing is around agricultural, sector, where we need more investment in irrigation. We need more investment in climate resilient infrastructure, in flood management, which was also announced, if you recall, during the budget. And these are, areas where the government is now taking cognizance of, the impact of climate change coming into these sectors. So I'm quite hopeful that, also with the rooftop solar scheme doing so well, I'm quite hopeful that, some of these bumps that we are starting to see already come in the GDP data will also be handled. But, the other area that I really feel that we need more effort again is logistics. PM Gati Shakti and investment in our cities has been prioritized in the budget, and we need to start seeing more and more expenditure and disbursements on that, because that's when we really see the trade sector also pick up.
Right, Teresa, talk to us in terms of sectors that you think will lead the recovery, because industrial output did take a hit, especially in the first quarter of this financial year, simply because of the oppressive summer heat. Apart from other sectors, industry was one of the highest to take the hit. But going forward, there will be a revival in industrial output.
So there should be some revival in industrial output, but I don't think it would be very significant. So as I said, we're seeing some cyclical moderation in growth, which I think could continue even into the upcoming quarter. So I'm not expecting a significant decline in growth from what we've seen in the current quarter, but neither a significant pickup. In the second half, we will see slightly better numbers that we spoke earlier, because government spending, which is not really taken place because of the elections, that will happen. But even if you look at the pipeline of projects from the government, both the central and state governments, even in FY24, that pipeline had seen a slowdown in FY24 itself. Now that you don't have a strong pipeline in place, it's very difficult for the government to come and spend very aggressively, even going into the second half of the year. So our base case expectation is that the order book should start building up for, with agencies like the NHAI again starting to give orders, from the June, July, and in the months going forward. So because of that, we will see some pick up in government spending, but not significantly so. So all the hopes are largely pinned on the private sector capex recovery, but even there, it is led by few sectors like the PLI linked sectors and largely the renewable energy space. So that's where we are seeing some activity. But I think all the kind of drivers are in place for the private capex recovery. But I think even the private capex recovery is going to be a slow and a prolonged recovery, even in that case.
Right, Mitali, Moody's has just upgraded India's GDP forecast for the year to 7.2%. We are standing at a crucial moment when it comes to the economic recovery post-pandemic. It's very important that the moderation in growth this year is not as low as being estimated, and any improvement would be good news.
Absolutely, absolutely, Krishna. I mean, I think the Moody's estimate is based on actually the estimates that are coming in the manufacturing sector. So even in this particular quarter's data, if we look at the manufacturing numbers, they are very encouraging because they have increased from 5.9 to 8.4%, and manufacturing itself has gone from 5 to 7%. Construction sector also doing very well at 10.5%. So, these numbers indicate these are actually leading indicators for growth. So even if in this quarter we are not seeing that growth translate into faster growth in consumption, because of this increase in manufacturing and construction, we'll see the consumption increase in the next quarter. That is definitely my my estimate from the private consumption point of view. And also in the next quarter, we expect government spending to also increase. What is very important now at this stage is for investment to be resilient and for investment to keep growing. And if we can keep getting that investment growth into the manufacturing sector, then we'll be well on our way to an annual growth rate of 7%.
Teresa, annual growth rate of 7% is where everybody's estimates and hopes and aspirations are around for GDP for this financial year. Anything around 7% is a good number. But there are a couple of concerns at this stage. Corporate earnings, for one, which were mixed for the quarter gone by. They have to revive. And apart from other issues that plague the economy.
That's it. So I'm on the more conservative side. As you rightly point out, the corporate earnings growth remains a key cause of worry. It has only been in single digits in this quarter. It can pick up in the upcoming quarters, but even then, the best of margin expansion has largely behind now. It has to be driven by revenue growth, driven by volume recovery. So probably in the third quarter post festive season, we'll be able to take a better call whether we're actually seeing that volume recovery. So our estimates are on the conservative side. We have a 6.6% GDP growth for the entire year.
And are you expecting any kind of a rate cut, given the way inflation and GDP are progressing?
See, in the near term, no, but we are expecting a rate cut. Our base case is February 25. Earliest could be in December.
Okay. All right, we will leave it at that. We're completely out of time over here. Teresa John, Deputy Head of Research at Lead Economist at Nirmal Bang, and Mitali Nikore, Founder and Chief Economist at Nikore Associates. Thank you, both of you, for taking time out to be with us here on the show.